Hi, this is John Thomas with ATEX Freight Broker Training, and today I'm going to give a tutorial on a 3-month cash flow. I first want to explain the concept, and then I'll show you some spreadsheets where you can actually set up your own little simple cash flow projection. But I want to emphasize that being a freight broker and running a freight broker business is more than just being a freight broker. You need to use good cash management skills. These are essential if you want to be profitable. So let's look at the concept of how we're going to put this spreadsheet together here. In very simple terms here, you're going to, first of all, get a load from a customer. Then you're going to find a truck for that load. And then generally, you will pay the truck first, and then you'll receive your payment from your shipper anywhere from 10 days to 2 or 3 weeks later, depending upon how you work your business. And so you just repeat the process. Get a load, find a truck, pay the truck, get your money. Let me give you a little more detailed example here. Okay, let's say number one here, you're going to, first of all, get a load. It's going to pay you $1,800. You're going to find a truck. You're going to pay the truck $1,500. And so you're going to first pay the truck the $1,500, and later you'll receive your money from the shipper. The difference here is $300, which amounts to about almost a 17% profit margin. And you want to keep tabs on that, but that's a different story. On this tutorial, we're going to focus specifically on cash management. So let's take a look at some of these spreadsheets, and we'll go from there. Okay, here's a spreadsheet I've got set up, and let me explain how this works here. You will first, on the left, list the days of the month here, 1 through 31. Up on the top, you're going to have a column for cash receipts. When you receive cash, you'll indicate that here in this column, and then any payments to the trucks would be made in other columns here. Here we have Midnight Express and Flying R. And the LOC here is a line of credit, and let's say, for example, you've got a line of credit of $5,500. To set up your spreadsheet here, you're going to, first of all, establish your line of credit, and then you're going to be able to get a running balance throughout the entire month. And you do this by setting up a formula where you first of all add the line of credit here, and then you add the cash receipt, and then you subtract any payments to the truck, and that gives you a running balance. So down here you can see a very simple setup here where you have received an invoice from your truck. Generally, 21 days later, you want to pay the truck. So here we've paid them $2,800. And you can see here the running balance has been decreased by $2,800. But let's say the shipper pays you here 10 days later. Down here, you collect your $3,200. And again, your running balance over here will show an increase of $3,200. So your beginning balance is $5,500. Your ending balance is $5,900. And you get a profit here for the month of $400. So this is real simple terms how it works. You're going to first of all establish a date where you receive the invoice from the truck. 21 days later, you're going to make payment, and 10 days thereafter, you're going to get a receipt from the shipper. These are general days. Generally, 21 days is when you want to pay your truck, and generally you get paid later from your shipper. So this is just a general format of how to lay this out here. Let's go take a look at a further example here. Here on the first of the month, you can see that you've received 2 invoices, and then 21 days later, you've made 2 payments here. You started with a line of credit of $10,000 in this particular example, and you decrease the running total by the 2 payments. So your ending balance is $61.75, and for the month, you've got a net, not exactly a loss, but you have a cash disbursement exceeding your cash receipt of $3,800. $25 because you haven't made any collections here. But you're going to make your collections on the next tab here. So let's take a look at the next tab, or the next month. So in month 2, you're going to collect 2 payments from your 2 loads that you got and delivered. And so for the month here, you've collected these amounts here. And again, over on the right-hand side, your running balance has been increased by these 2 payments that you received. So at the end of the month, you've got an ending balance of $10,365, and you started with a beginning balance of $10,000. So for the 2 months, you've collected $365. And again, this is just very simple here. But let's go ahead and take a look at the next one, and we're going to do a example here of a 3-month cash flow where you've got a number of shippers and trucks involved. So this is the month of March here, and over here you've got a payment that was made to Midnight Express. This was from a previous invoice that you received from the truck. Over here you've received 2 payments. These were from previous loads. But over here, the green, these are new invoices that you've received for loads that have been delivered. And what you want to do basically is once you receive your invoice, is go down 21 days and enter the amount here. And then the receipt for this payment would show up in the second month. So here in the first month, you've got several amounts that you're anticipating to be paid to the trucks. And then we're going to take a look at the second month, the month of April. And we'll go to April. Here you can see over on the left, you've started to receive these monies from the first month. And you've also made some payments to the trucks here. And you've also gotten invoices here from loads that have been delivered. And you're going to set up 21 days to pay out to the truck and about 31 days to receive your money from these particular loads here. So here in the second month, you can see the beginning cash balance is $31.95, and that carries over. You've got it set up here with a formula where it automatically carries over from the end of March. Here at the end of March, $31.95, that carries over as a beginning balance here for the month of April. And you can see the running balance here throughout the month. And that's what you're trying to anticipate. You want to anticipate any potential losses, and you want to specifically focus on any potential cash shortfalls that you might run into. So for this second month here, you've had an ending balance of ending balance of $10,925, beginning balance of $31.95, giving you a cash flow of $77.30 for the month. Now let's take a look at the third month here. Here in the month of May, you've made some more collections from shippers for loads that have been previously invoiced and delivered. And you've made some payments here to some loads that have been delivered. And you've also entered some new invoices that you've received here. And so the process just continues on and on. You just continuously make projections. Once you receive an invoice, you just project out 21 days to pay the truck and 31 days to receive payment from the shipper. And it's a continuous process for each particular load that you get. So in this particular example here, you started with a balance of $10,925. You end up with $98.95 for the month. And for the month, that's about $1,030 cash disbursement over your cash receipts. Now, the thing I want to emphasize is it really is important that you get your money collected from your shipper as soon as possible. You may be able to work some terms where you get paid quicker. In our training, we show you some techniques where you can get paid quicker rather than wait for 30 days, or I know some brokers are waiting 60, 90 days, and that's really ridiculous. You can't run your business that way. You've got to get the money coming in. I'm going to show you an example with the very same loads that we looked at here, but I'm going to show it as if the shipper is paying you within 45 days rather than 31 days. So let's take a look at the first month if the shipper starts paying, or if you start collecting monies from the shipper on average of 45 days rather than 31 days. Okay, this is the same setup as the previous example, except you've got payouts to the truck, but your cash receipts don't really start kicking in here. You've got a couple cash receipts here from prior loads, but here for the first month, you've got a beginning cash balance of $10,000, ending cash balance of $31.95. So your cash outflow exceeds your intake by $6,800. And of course, here you've got your running total showing your running balance is dwindling lower and lower because you're not receiving your payments as quickly as you did on the first example. And so let's go into the second month of this here. And here we started with $31.95, the beginning balance here, and it was carried over from the ending balance of the previous month. And here you start receiving some receipts here, but they're later than the 31 days. And you're still having to make payouts to the truck within 21 days. So as you can see, the running total over here, you're down to a negative over $2,000. And so you've got to cover that gap somehow with additional funds from your cash, from your line of credit or from your capital. But you start kicking in and picking up some more money here, and you're going to get paid the same. But the question here is the timing. If your timing is not good with making collections from your shipper, and you don't want to wait to pay your trucks, you do want to pay your trucks generally within 21 days. Don't stretch it out too long, or else you'll lose some good motor carriers. But I just want to show you how you can set up a cash flow very simple like this here. You can do some of this on QuickBooks. For example, when you receive a load, you can set up an account payable to your truck, and you can set up an account receivable. But this gives you a really good little visual of maintaining your cash management here between your receipts and your payments to the trucks. If it were me, I would set up a separate checking account for your payment to the trucks. I would not commingle it with your other expenses. And so you would just have a separate checking account where you receive monies from your shipper and make payments to your truck. So I hope you have benefited from this. I'm going to tell you how you can maybe get a copy of this here if you want to get a blank copy, or this same copy here that I'm using, and you can modify it for yourself. Just add or decrease your columns here, and just keep your trucking companies on the top and enter your shippers here as they pay you. Let me show you how you can get a copy. If you want a free copy of this Excel spreadsheet, send me an email to info@atexfreightbrokertraining.com. Put cash flow in the subject line, and I'll send this out to you. Thanks for watching.